Good evening and welcome to Budget in You. I'm Faye D'Souza. Thank you so much for joining us. Now remember, like I told you yesterday, we've set aside some space for you at 7 p.m. every day dedicated to the retail investor. If you have any question at all about your money, and if it has to do with the upcoming budget announcement that we're going to hear from the Finance Minister, you can pick up the phone and call us on the number that's at the bottom of your screen right now. You can also tweet in a question if you'd like to. And of course, joining me today to answer all of your questions is Andrew Holland, CEO of Ambit Investment Advisors. Andrew, it's such a pleasure to have you in the studio.
Thank you for having me.
Thank you for coming in. On behalf of all retail investors, as always, in the run-up to the budget, there's so much speculation about what it's going to be. Is it going to be, are there going to be a lot of, investment tidbits for us? Will there be room? Will there be more tax benefits for the retail investor? From where you're looking at it right now, given what we are expecting now on the fiscal deficit, do you think the Finance Minister has enough elbow room to maybe be nice to the retail investors this year?
I think he should really concentrate on the economy, to be honest.
Okay.
Every year we go through this big build-up for the budget. I think it's the only country I know where we have this big build-up. But this year, I think, after many years, we really are focusing on the budget because, what happened in Delhi and really, people speaking out saying nothing's changing on the ground. So unless we see some real, kind of reforms and also expenditure on the infrastructure, then the economy is really not going to start picking up for some time. So I think this is a budget for spending money on the infrastructure or kickstarting the economy. I think putting a little bit more tax saving in our pockets isn't going to get us out there spending money. Until the economy picks up.
I have a quick question for you then. I remember the last time we spoke, which was a few months ago, you said you were really, really bullish about what India was going to achieve in the next 5 years,
yes,
or maybe in the next 10 years. So if, as a retail investor, I asked you today, should I be tweaking my portfolio before the budget? Should I be making changes? Is this an event that I should be reacting to at all? What would your response be?
So I would just hold on and see what the budget brings. I think, from a market perspective, let's look at it from a market perspective. The market's got expectations which are rising every day.
Yes.
So the Finance Minister, even if he meets our expectations, the markets might not do very much. Right?
Okay.
If he disappoints, markets might come down. But that doesn't take away your longer term view that the economy is going to continue to grow. It's a domestic growth story. So therefore, that's a great opportunity. To keep investing over that period. But don't look at the budget as being, this is going to force me to invest or I should take my investments out. It'll be a market event for a very short period till we move to the next one.
All right, so that's the truth, and we'll tell you the truth right here, that you shouldn't be making too many drastic changes to your portfolio, especially in the run-up to the budget at least. Let's wait and see what the Finance Minister has to say, and then we'll make those decisions. And of course, we'll be right here to help you through it. All right, I have a very interesting question for you on Twitter. Manoj Kumar Garg wrote in on Twitter, in fact, and he said, please ask Andrew what his top 5 investment ideas are for the next 3 to 5 years. So the good thing about that is we have an investor who's thinking long term.
Yes.
But if you were to give him a few investment ideas, what would they be?
So I think it's a very good question. You've got to play on many different themes over the next 5 years. One of our major themes, which on the last time I came on,
yes,
was the who's going to supply India theme, which goes across your economic cycles and your market cycles. So when you think about infrastructure spending, let's say railways, do you want to have the companies that own the railway tracks, or the companies that supply the railway tracks, or the wagons, or the whatever it is that goes into a. So that's the theme that will continue to play. A more shorter term theme is obviously that interest rates are going to fall very quickly in India. So therefore the banking sector is going to be a big beneficiary of that. And then as the economy picks up, then me and you are going to have more money. If we're not, if we take out loans, it's going to cost us less. So it means we're going to spend more. So consumer discretionary companies come in. So those are the themes that will play out over the next 3 to 5 years.
So when you, let's just focus first of all on what you said about the banking sector. The automatic question, people will turn around and say, aren't you worried a little bit about NPAs? Would you prefer private banks or public banks or housing finance companies? What would you say to that?
Yeah, so I think you can obviously, private banks are, where you feel more secure. But with the PSU banks, if you go back to the previous cycle when interest rates fell down very sharply, 2004, 2005, the banks used their bond gains to effectively clean up their balance sheets. you know, from restructured loans and NPAs, and then they can move forward and start doing the normal borrowing again and lending. Hopefully, not making the previous mistakes of you know, that they have done over the many years that they, you know, you've seen the non-performing loans now.
All right. So remember, if you have a question for us right now, you can, of course, tweet out that question to @ETNowLive, or you could just pick up the phone and call us at 022-249-25089. In the meantime, Oswald has sent us an email. He wants to know if it's advisable right now to buy or sell stocks during this one period, that's pre-budget, and if so, what segments should he be buying at this point? It goes back to what we were saying some time ago, which is wait until the budget plays out. But I do want to ask you this. We have heard from a lot of investors who are asking us about the infrastructure sector.
Yes.
And, you know, that's because analysts like yourself have been saying that we want the government to spend on infrastructure. This is a government that's possibly very bullish on infrastructure. It's likely to happen. So then does it not make sense as a retail investor that I pick up some infrastructure stocks before they run up on Saturday morning?
No, because you've got 3 to 5 years to play this whole cycle. You know, what happens is on budget day, we'll all be kind of excited, and then we'll look through the fine print and say, well, actually it wasn't as good, or it's actually better for certain sectors than we initially think. So missing the first 2 to 3% of share price rise or market rise in a longer term bull run doesn't really matter. So wait, see what the budget brings. It'll give you clarity. So Monday morning, you can come with more confidence and say, yes, I want to invest in infrastructure because I can see what the government's trying to achieve here in terms of the expenditure. It's going to have a multiplier effect on the economy. So which sectors would be the beneficiaries of that? So I don't think missing the first 2-3% really matters.
All right. There's another question that's come in on Twitter, and I'm just going to take that. Abhishek Pandey has just tweeted a minute ago. He said, would Andrew advise a position in the power sector in a mutual fund, given the possibility of reforms coming through? So he's got, you know, you're 1 foot on this side, 1 foot on that side. He's using a mutual fund, but he still wants to take sort of a strategic view on it. Now, would you recommend power sector mutual funds at this point?
I'm not really in favor of the power sector. I don't want asset owners at the moment because that's late cycle earnings.
Yes.
You know, they have to, first of all, build a power plant, and then they have to get, you know, they have to then sell the power, which takes time. And most of these companies have huge amounts of debt. So I want to know who's going to supply the power company to build a power plant or whatever it's going to be. That's where you're going to make the most money in the early stages of this economic cycle. But
there isn't a mutual fund right now that will invest in only companies that supply power. So that would be a slightly difficult one for somebody like Abhishek to do, wouldn't it?
So if you look at the mutual funds, say, are going across infrastructure, they will identify companies in the early part of the cycle who be the suppliers rather than be the asset owners at the moment.
I have a quick rebut though. The infrastructure mutual funds don't have a great track record in India. The last 5 years have been a little rough for them. Are you expecting that to change?
Well, we can always see it from a lot of the companies who supply the power sector have actually kind of started to move up very sharply in terms of their share price and earnings. So, you know, you have to go through each of the infrastructure mutual funds and look at where the holdings are to work out whether it's the right mutual fund for you. But if you can find where they're looking more for the supply side of the economy rather than the asset owners, and that's where you're going to make most money.
I have another question from, you know, picking up from where Abhishek has asked us about the power sector. If you say you're not very, very bullish on the power sector right now, is there a better sector for him to look at? Would you rather him look at a banking fund?
So it's all relative. So I would say the power sector is late cycle. The banking is kind of early to mid. But if I'm expecting interest rates to fall sharply, we've had 25 basis points already. I think we're going to get another maybe 50 basis points in April, March, April, and at least 100 by mid-June. And over the next 2 years, 250 basis points. So that tells me the banking sector is a sector you need to be owning today to get the benefits of that interest rate cycle coming down.
All right, let's take another very quick question. Pranav Singhvi has written in, and this is an interesting question for you, Andrew. He says, why do structured products have a really high ticket size barrier and are not made available to small investors like me? Now, you want to explain that?
Well, I'm not sure which structured products he might be talking about, but I think with structured products, you really need to understand what you're getting into and what the risks are. And I think, you know, if I look at alternative investment funds where we have a long-short fund, the minimum investment is 1 crore as laid down by SEBI, because it is a more sophisticated product and it can't be missold. So I think with structured products, you need to understand the risk that you're taking, and therefore, it lends itself to people with, who can take those kind of risks.
All right. And for someone like him who wants, something like a structured product, would a regular mutual fund also do the trick if he picks it carefully?
Depends on which sector he's looking at. But I think my view is that if unless you're doing stock picking yourself on a full-time basis, then mutual funds is the best way to play the markets.
All right, we're going to take a very quick break, but keep sending in your questions. Remember, our Twitter handle is at the bottom of your screen, and you can also pick up the phone and call us. We'll hear from you on this other side. Don't go anywhere. All right, welcome back. You're watching Budget in You and ET now. This space is reserved for the retail investor. It's a special series where we'll be answering all of the questions you have on investing in equity, in debt, your asset allocation questions, your investment strategy questions. Maybe they have something to do with the budget, maybe they don't. We don't care. Pick up the phone and call us. Our phone number is at the bottom of your screen. Keep sending in your questions. In fact, you can call us right now. Let's get back to the questions that we have. We had an email from Apache who sent in a question saying he wants to invest in the solar energy space, and he wants to know if that's a good idea. Andrew, there's been a lot of talk again about the fact that this might be a government to focus on renewable energy. And in all good conscience, it's what we should all be doing at this point. But there aren't too many choices in our market right now, are they?
There's hardly. There's actually no choices. The nearest I could think is Suzlon. But again, there's a change there in the management, and you have to really see how that's going to play out. But there's no real direct play here, as far as I can work out.
So if you are interested in that space, then let's just wait and watch for a better option.
I don't. I'm sure in the budget we'll hear about smart cities. How do I play that? I still don't know the answer. So a smart city
Whoever's
is something.
Supplying.
Someone's going to supply something to a smart city.
Whoever's going to be contracted to build a smart city. We have someone on the phone. Suresh is on the phone, I'm told by my producer. Suresh, good evening. Thank you for calling us. Tell us what your question is.
Hi, good evening, Andrew.
Good evening.
This is Suresh here.
Go ahead, Suresh.
I wanted to ask about oil sector, on oil refinery stocks. Is it a good time to invest on oil refinery stocks like ONGC and OAL? And what are the status of the subsidies which is going to do in the budget for these sectors?
Well, Suresh, I want to very quickly ask you what your time horizon is for this foreign investment if you were to make one at this time?
Maybe 3 to 6 months time.
3 to 6 months. Okay, that's not ideal, but would you recommend that at all?
No, I think the oil and gas sector. I'm not very positive on. Subsidies will have come down, and that will help, but it leaves a lot of investment. And again, with oil prices where they are, I think margins are going to be under pressure going forward. So it's not a sector I need to be in. Again, I don't want to have asset owners. I want to know who's going to build the pipes which will carry the gas. That's going to be more important to me going forward than having the exploration companies and at this point. So if it's more 3 to 6 months, then I think, again, look at the interest rate cycle. That's where you're going to make, in the banking sector, is probably going to be a more shorter term.
Okay, all right. So avoid the oil and gas sector for the next 3 to 6 months. I'm going to very quickly take another phoner. We have someone calling in from Karnataka again. Good evening. What's your name? Tell us your question.
Good evening, ma'am. My name is Kotresh.
Yes, Kotresh, go ahead.
Actually, I just wanted to invest money as a budget point of view in a couple of days. Which is the right stock? Whether I want to invest the money in the options, call, or any other shares. If I want to invest any shares point of view, which one you would like to suggest me?
Actually, Kotresh, tell me this. If you're going to invest right now, what is this money for? Are you a long-term investor? How long can you hold on to this investment?
I'm a short-term investor.
Define short-term here.
3 months, up to 3 months.
Okay, there's another one there. So he wants to know if this is the right time to buy any shares at all. Should he wait for clarity from the budget? Which you've already answered twice. And so I'm going to assume that answer is yes. What would you like him to do if he has a 3-month horizon? He can't completely put all of his eggs in the banking basket. Is there something else you'd like to add to his portfolio?
So I think you should actually wait till the budget. I mean, rather than trying to second guess what the finance minister is going to do. And if you go back across all the budgets previously, apart from Chidambaram's dream budget, it's always been slightly disappointing to market neutral. So I don't think you're going to miss out. And even if you do miss out in the first 2-3%, it doesn't matter in the longer term scheme of things. And you'll be able to identify companies and sectors from the budget which will be a beneficiary of what the finance minister is trying to achieve to grow the economy. So I think waiting is fine.
All right, so wait until after the budget. And I've been told we're running out of time, so I'm going to try and quickly take another question. Pradeep has written in, he sent us an email. He'd like to put aside 10,000 rupees every month in the stock market starting March this year. He says his goal is to buy a home by mid-2017 or by the end of that year. And he wants to make enough money from the stock market through these monthly investments to put a down payment down on his home. He wants to know what's the best way to get returns on that portfolio. Well, this is the tough one. If he does also just do mutual funds, because, you know, that sort of money on a monthly basis, it sounds a lot like an SIP. What would be the ideal way to approach the stock market right now?
So I think SIP would be exactly, you know, where he should be. And I think he can, again, just wait for the budget. He said mid-March. He can then say, okay, I want to have something in the banking sector, maybe something towards infrastructure, depending on what is said in the budget, and just keep investing in those in a few of those sectors, which will be the main beneficiaries of the economy growing.
So tell me this, for someone who invests in the stock market at this point, if he's looking to buy a home over the next 2 years, he has a 2-year time horizon, ideally what could he expect from the stock market? 2 years is not a great amount of time to be in the market, isn't it?
No, it's quite a short period of time, so it depends on really the kind of what he's trying to buy as well,
yes,
and the expenditure there. But I would have thought over the next 2 years, and I'm sticking to my view that we are in a bull market, that he could be, you know, thinking of maybe 40-50% returns over that period.
Okay.
So if he's investing steadily over that, he should be making some reasonable returns to help at least put a down payment on an apartment.
Okay. All right. So, Pradeep, you could, of course, expect 40 to 50%, but my 2 pence of advice to you would be to keep your deadline flexible. So if you do find yourself in a bit of a dip in the market, you can wait 6 months for the market to recover. So don't give yourself a hard deadline of 2 years to buy that home, and good luck with that investment. Last question on the show. Nomesh has written in, he wants to invest in the infrastructure sector. Please give me some advice. He says he's left it open-ended. He wants some advice on the infrastructure sector. What would you recommend he does?
So I think we're going to have the railway budget very soon, so that will give you some idea on infrastructure. And obviously we will wait till the budget and see where the government's going to be spending money. It has to spend some money on infrastructure. I still go back to who's going to be the supplier to the infrastructure expenditure. That's where you're going to make the most money in the markets, in the early stages of the economic upturn.
So net, what you're saying right now, don't do anything for the time being.
Yes.
Let's wait until the budget comes out, and then we'll actually be able to figure out where the real push is going to be. Banking, we know, because of interest rates, will be a good push for the time being.
I think that would be great advice.
All right, Andrew, thank you so much for spending time with us. Of course, you know, we're going to be here for the rest of the week, right up till budget day as well. So if you have questions, you could write that phone number down and call us anytime during the week. It'll be my pleasure to hear from you. Thank you so much for watching.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.